When I first started investing, the question that haunted me was, what's the best way to grow my money if I only have $100 to start? I knew others had the same question, so a few years ago, I decided to find out. I created an experiment where I invested $500 and $100 each into 5 different options: individual stocks, REITs, cryptocurrency, gold, and index funds. Today, I'm here to share what I learned, how those investments performed, and what I'd recommend if you're just getting started. Now, let's talk about how I judged these investments. I didn't just look at the returns. I wanted to evaluate them on 5 key factors: the learning curve, how easy it is for a beginner to get started; passive income potential, whether it can make money without you needing to sell it; tax efficiency, how well it helps you keep more of your returns; risk level, how likely you are to lose money; and finally, the results, what my $100 turned into after 4 years. Before we dive in, let me clarify that I'm not a financial advisor. I'm just a guy who has experimented, learned, and grown through investing. Everything I share is based on my personal experiences, and I encourage you to do your own research before making any financial decisions. Let's start with individual stocks. This is where you pick companies you believe will grow and buy shares in them. The learning curve here is steep. If you want to succeed, you need to research a company's financial statements, leadership, and competitive position. Apps like Trading 212 can help by offering demo accounts where you can practice trading with fake money before risking your own. Passive income with stocks is possible if the company pays dividends, which are regular payments to shareholders. Tax efficiency is another plus. Using accounts like a Stocks and Shares ISA in the UK or a Roth IRA in the US can shield your profits from taxes. But the risk is high. Individual stocks are volatile, and a single bad choice can wipe out your investment. In my experiment, I invested in Samsung, and after 4 years, my $100 was worth $67.72, a loss of 32.3%. That was disappointing, but it showed me the importance of research and strategy. If I'd invested in Apple or Microsoft instead, my returns could have been 70% or more. Stock picking isn't about luck, it's about being strategic and informed. Next up are real estate investment trusts, or REITs. These let you invest in real estate without buying property. Think of it as pooling money with others to own properties like shopping malls, offices, or apartments. The learning curve for REITs is moderate. It's much simpler than buying real estate, but you still need to research the type of properties a REIT invests in. Passive income here is excellent since REITs are legally required to distribute 90% of their profits as dividends. Tax efficiency is also strong, especially if you hold REITs in tax-advantaged accounts. The risk level is medium because REITs diversify across many properties, but they're not immune to market downturns. My $100 investment in a commercial REIT was worth $98.59 after 4 years, a small 1.41% loss, but when you factor in dividends, I was up by 10.52%. Even though it wasn't a huge gain, it was consistent and stable, which is why REITs are great for people seeking reliable passive income. Cryptocurrency, on the other hand, is a whole different beast. It's digital money, often decentralized, and it runs on blockchain technology. The learning curve is moderate. Platforms like Coinbase make it easier to buy and sell crypto, but keeping your investment safe with tools like hardware wallets is crucial. Passive income is possible through methods like staking, but it's riskier than earning dividends or rental income. Tax efficiency is poor since many countries heavily tax crypto transactions, and you can't hold it in tax-advantaged accounts. The risk is extremely high because prices can skyrocket or crash overnight. In my case, my $100 investment in Bitcoin grew to $652.24, a return of over 550%. That's incredible, but it's not typical. Bitcoin has been the best performing asset of the past decade, but most cryptocurrencies don't deliver such results. For me, crypto is speculative. It's exciting and has potential, but it's not for the faint of heart. Gold, however, is a classic. It's been a trusted store of value for centuries and is often seen as a safe haven during uncertain times. The learning curve is low. You can invest in physical gold, like coins, or through gold ETFs, which are more convenient. However, gold doesn't generate passive income. It's purely a way to preserve wealth. Tax efficiency is decent. Certain gold coins in some countries are exempt from capital gains tax, and ETFs can be held in tax-advantaged accounts. The risk is medium because gold is stable, but it doesn't grow as fast as stocks or other investments. My $100 investment in a gold ETF grew to $140.10, a 40.1% return. It was solid and steady, but not as exciting as Bitcoin or stocks. Gold isn't about quick growth, it's about security. Finally, we have index funds. These are my favorite. They're baskets of stocks that mirror an entire market like the S&P 500. The learning curve is low because you don't need to pick individual stocks. You're investing in the overall market, which has historically delivered consistent growth. Passive income is moderate since many index funds pay dividends. Tax efficiency is excellent if you hold them in tax-advantaged accounts. Risk is low because they're diversified across hundreds of companies. My $100 investment in an S&P 500 index fund grew to $179.53, a 79.53% return. It's no wonder index funds are considered the gold standard for long-term investing. They're simple, reliable, and consistent. So what have I learned? For beginners, index funds are the best starting point. They're easy to understand, low risk, and effective. If you're looking for high growth and can handle volatility, crypto might be worth exploring, but only with money you can afford to lose. For reliable passive income, REITs are excellent. If you're focused on wealth preservation, gold is your go-to. And if you're confident in your research, individual stocks can deliver strong returns, though they come with significant risks. Beyond these 5 options, one of the best investments you can make is in yourself. Whether it's learning a new skill, starting a side hustle, or building a business, investing in yourself often yields the highest returns. For me, this journey has shown that starting small, staying consistent, and diversifying are the keys to long-term success. No matter where you are financially, the best time to start is now. Even $100 can grow into something significant over time, thanks to the power of compounding. So don't wait. Take that first step today. And if you found this helpful, don't forget to like, subscribe, and check out my next video where I share even more strategies for growing your wealth. See you there.